Hello, you're watching Proactive. Joining me in the studio today are Benn Mikula, he's the CEO of Cordiant Capital, as well as Richard Hulf and Traynor, Managing Directors and Co-Heads of Cordiant's HydrogenOne. Thank you all very much for coming in.
Thank you, Stephen.
Hi, good to see you.
Ben, I'm going to start with you. Congratulations on today's news. Could you start by giving us a summary of the deal and the thinking behind it?
Well, thank you, and it's very nice to be here, and it's very nice to welcome two new colleagues. Cordiant is announcing today that it's acquiring HydrogenOne LLP, which in effect means that the HydrogenOne team will be joining the Cordiant family. For us, it's a very important transaction because it broadens in a most material and interesting way our clean energy, our renewable energy franchise, and it will give our private capital investors access to the emerging and important category of hydrogen. From a structural point of view, Richard and JJ will continue to run the franchise that they've built over the last couple of years. The rest of the team will also be joining Cordiant, but that team will now be supported by the full resources and capabilities of Cordiant Capital in fundraising from an institutional perspective, and in many other ways that probably I could bore at length on.
I mean, could we take a few moments just to look at what the deal means for the listed fund and also for existing shareholders? I'll start with you, Ben, and then perhaps Richard and JJ, you could also chip in.
I think if you look at what it brings to shareholders in HydrogenOne, the listed investment company today, at the most important level, it's access to new capital to help support existing investments. As we recently demonstrated with Cordiant Digital Trust, we have the capability to bring institutional investors from the private capital world into partnership with us in transactions. And we're hoping to do the same thing with the HydrogenOne portfolio. And that will assist shareholders by providing more capabilities to continue to participate in these investments and to pursue other opportunities in the hydrogen sector. And why would private capital investors want to come to hydrogen? Well, it's an important, indeed fundamental industrial market worth hundreds of billions of dollars today. It's evolving rapidly, blue, green, hydrogen, all of the things that Richard and JJ can talk about at great length. But I think there will be significant interest in a number of these transactions. And so we're really seeing a synergistic partnership here.
Mm-hmm. Your thoughts on that, Richard?
Yeah, I'd like to amplify some of those points there. If we look at what Cordiant is, it's not just about infrastructure. Within infrastructure, it's agriculture, it's tech, and it's energy. And there are a lot of touch points between the energy sector, between the hydrogen sector and agriculture, for example. So as well as expanding the market for the hydrogen opportunity, there's also the team and the synergies between the team, the leadership of the other capital structures within the other parts of Cordiant that will be sort of mirrored into what HydrogenOne Capital is doing as well. But most importantly, I think it's the expansion of the network of the investment contacts that Cordiant brings to provide that essential lifeblood of capital to HydrogenOne Capital to carry on investing into the hydrogen space.
JJ, so what will change because of this deal? Will the current strategy continue, or will there be a change in direction?
Well, look, let's recap. I mean, the strategy we set at the IPO was to invest in hydrogen, obviously, and then within that, in the private part of the hydrogen market, where there's the best value, where there's the best opportunities, and to really focus in the immediate on supply chain businesses. It means fuel cell, it means electrolyzer, and so on. And then over time to invest in the projects that actually manufacture the hydrogen itself. So that's what we set out to do, and fundamentally we think that is a good place to be and a good strategy. Have things changed since we did the IPO? Well, I think we can all see that governments are changing around the world, and particularly in important hydrogen countries. So new government coming in Germany, new government here in the UK, change coming in the US. And we need to reflect on that and make sure that we're allocating capital appropriately as those political changes work through. I think the other thing that's happened since the IPO is just the sheer size of the opportunity set. When we launched in 2021, there were about 50 private companies, I think 56 from memory. And today there are over 200 private companies that we see as investable. And so that step up in the size of the opportunity set, I think, really talks to why we want to join forces with Cordiant here to get more access to deeper pools of capital to grow in that space.
Stephen, it really is a perfect match. Cordiant has three broad industry areas of focus: digital infrastructure, energy transition infrastructure, and agriculture, as Richard just pointed out. In each one of those, we invest in the middle market, providing growth capital to companies that are really tackling some of the most important and interesting economic challenges of today and making investors money in so doing. And bringing true hydrogen experts who've really been pioneers in the area into the broader energy transition franchise at Cordiant matches up with our overall strategy, and I think there's a really strong alignment of investment thinking too. So I think there are many, many ways in which this will come together in a most agreeable fashion.
Richard, perhaps at this point it's worth giving investors a reminder of the current strategy and also your returns model.
Just a reminder to investors, HydrogenOne Capital was set up to invest into the hydrogen space, into hydrogen companies being companies that are the discrete manufacturers, into the supply chain of electrolyzers and fuel cells, and into project developers in the hydrogen space, targeting a 10 to 15% return over time. We mention that because it does take time in the hydrogen sector, and the returns are generated as well as through the year-to-year performance of the companies, but mainly from the exit of those companies at multiples of our original investment is the plan. And so the hydrogen sector has been growing rapidly. Now, we can forgive investors for thinking that perhaps it's gone another direction or it's slowed down. But for us, the investment opportunity into hydrogen is right now. And the essential part of what we're doing is because we're investing into industrial hydrogen, which is more of the focus than hydrogen into mobility. Mobility will come in time. We will be able to decarbonise the heavier ends of the transport sector into HEV trucks, into trains where batteries don't work so well. But we've got to invest into the industrial part of hydrogen now, which is really the agricultural sector. The manufacture of ammonia is a key part of what we're doing. It's about the reduction process in steel and cement. It's about in the refining process, desulfurization. So we've got to focus on the industrial market right now, and it is here right now, and that's really what's driving the original thesis of the fund, and it's working well.
Ben, can you comment on why hydrogen? It's a sector that's had a lot of hype, but the sentiment towards the sector seems to be at a relatively low point at the moment.
Well, if I might draw on some of my experience in digital infrastructure and communications technology for an analogy, I think it's important to note that every industry which becomes important in the economy goes through a series of ups and downs, and they're as much emotional ups and downs as anything. And what we've seen is perhaps a very ebullient phase for hydrogen, followed by a phase in which there have been a large number of news headlines about delayed projects. But fundamentally, this is a multi-$100 billion real industry today that is going through a transition. And it's that real-world aspect, that transitional aspect, that is creating investment opportunities that are really quite scaled up and interesting. And so for us, being able to serve the public shareholders in the listed investment company and bring these opportunities to the private capital sector is really very exciting for Cordiant. So that's why we were happy to form this partnership, and why we're happy to work together to make hydrogen an integral part of our energy transition franchise.
I mean, just to unpack the size of the market that Ben's talking about there, that industrial market is about $170 billion per year. And that's expected to grow to about 278 by 2032. But that's the whole hydrogen market. That's about a sort of a 6% CAGR. If you look at the green hydrogen conversion that's going on within that, that's $2 billion market now, growing to about 140 billion by 2032. And that's a 50% annual CAGR. So those are the sort of growth numbers that we're going after here right now.
And it's not just about energy transition, I think. It's also about energy security, particularly in Europe. The Russian invasion of Ukraine has brought home the fact that we can't live in some idyllic world where your energy comes from is entirely independent. Hydrogen is a critical part of Europe's need to design a better energy future for itself.
Richard, how do you balance this though? Because returns might be better from traditional energy at the moment, whereas you're looking at a longer term trajectory for new energies like hydrogen energy.
I think we're through the turning point, actually, Stephen, just to put some controversy in the room. If you look at the hydrogen market today, it's $170 billion a year of revenue. It's 90 million tonnes per annum of hydrogen sales. This is sometimes called the grey hydrogen sector, not to be confused with grey hairs. This is gas that's used for making chemicals, for making fertilizer, for oil refining, and for steel and cement. It's big, it's been around a long time, and it's highly polluting. So the grey hydrogen industry releases globally 2% of all greenhouse gas emissions. That's not sustainable in an energy transition world. And so that's where clean hydrogen comes in. So if you compare that 90 MTPA on stream today in the grey sector, there's 0.3 MTPA of green hydrogen on stream around the world globally. And that is set to grow to at least 3 million tonnes per annum by 2027. So there's a 10x growth on the table now in the clean hydrogen sector. That's going to cost more numbers. That's going to cost $40 billion or so to put together. And those are projects that are post-FID. So real money, real investment, and real growth now. When we've done all of that, that's only 4% of the grey hydrogen market cleaned up. So there's an awful long way to go to make that transition in the grey hydrogen sector.
I mean, if you look at the immediate term, how do you balance better returns perhaps from traditional energy to long-term returns from clean energy, Richard?
Well, I mean, let's look at that through the government lens. You could just carry on polluting. I mean, there is almost a moral imperative to invest into this space, but that put aside, we've got to do something that's economic. Let's not take our word for it. Let's look at what the UK government's doing at the moment. So just in the last few days, the UK government has expanded its policy on hydrogen to power, and it's talked about, it's in the final stages of inviting final opinions about the proposition to convert the entire UK electricity generation system over to hydrogen by 2030. And so it's been through countless economic exercises of independent groups and bodies looking at how it can be economic. The main reason that these new technologies, new ideas aren't economic compared to the existing technologies is they're just simply not scaled up. But there are parts of the hydrogen network that are scaling up right now. So we're not going to sit here and wait for things to scale up. We're seeing this scale up going on already, and that's where we're seeing the economics work on a comparative basis.
So a perfect opportunity at this juncture then, Ben?
Well, yes, we think it's a perfect opportunity to bring two good teams together and to maximize the opportunities for investors in this exciting corner of the market. Cordiant's not saying that hydrogen, neither of these gentlemen, that hydrogen is going to be the one solution. There are going to be many solutions to bring the energy transition about and to bring energy security to Europe. You are going to see a very changeful government context. I mean, next year we're all expecting the Net Zero Industry Act to slowly roll its way through the European Union. All of these things will create opportunities, and I think slowly the news cycle will turn. We spoke earlier about that, about the ups and downs of emotion in a particular sector, but as we've noted, this is a $170 billion real-world, tangible corner of the economy that provides great opportunities to deploy capital.
Perhaps just to sum up, if you could all give us a few words just on what you think this brings to the table for all parties.
Let me have a go. Three things. Alignment on the macro. So we see the energy transition and the hydrogen sector within that in the same way. The combination, we bring sector specialism, we bring some track record, and obviously the Cordiant guys bring a much enhanced platform. So we see that as highly synergistic. And then look, the third thing is we see a gap in terms of government, industry and private sector involvement in hydrogen. So industry and governments are quite together on this stuff. But there's a huge funding gap which can only be bridged by the private markets, and we think this platform can play a big role in bridging that gap.
Richard?
I mean, what's actually happening here is you've got a battle-hardened team within HydrogenOne in the hydrogen sector that is ready to go, that is ready to pounce on these opportunities, and these opportunities are here now. It's a big sector. It's not a massive sector, but it's a fantastically material sector for us to get our teeth into. Cordiant brings us more opportunities. These opportunities we expand with. We also reflect into the existing fund as well. So it's good for everybody, but it's enabling us to get into the opportunities that are there now. And we've talked about the gradual shift in the markets, but market players know if you're late with these things and you can miss them so quickly, with an announcement from a government about a particular policy or a sudden U-turn or a change, you'll have missed it. So you have to invest into this space now, and that's why we're doing this deal.
The first thing I'm most excited about is adding some immensely high quality people to the team. The second thing is it's really bolstering the intellectual depth and capabilities at Cordiant. We had a fantastic energy transition team. Now we bring the experts in hydrogen, and I think that's definitely a 1 + 1 = 3, if that's not too cliched a thing to say. And I think the third thing is this brings opportunities for investors. It's our second investment trust at Cordiant. We're looking to be a consolidator in the investment trust space, creating a home for investment trusts that are perhaps growth and total return oriented. But it's also going to bring a lot of things to the private capital client base that Cordiant has, the pension plans and the insurance companies, who I think will be delighted to get to know Richard and JJ and their team over the months and years to come.
I'm sure we're going to have lots of discussions about hydrogen in those months and years to come, but thank you all very much for coming through today.
Thank you.
Thanks very much.
Thank you.
That's Benn Mikula, the CEO of Cordiant Capital, as well as Richard Hulf and JJ Traynor, managing directors and co-heads of Cordiant's HydrogenOne.